Okay, the last two sectors we're going to cover a little bit quicker. This is getting really long. Got tons of information in here. I hope you had a cup of coffee or something, or we can break it. I'm going to break it down into different segments so I can put them out separately because it's going to be hard for someone to watch all of this at once. But real estate sector, we're going to go through this quick because even though I do like some of the ETFs, the overall equal weight real estate sector, as you can see here, is really just right in the middle. Defensive. It has held up pretty well here recently and starting to make its way back towards this upper rail of this base. And after it back tested, a move over here would be a strong sign for the overall equal weight sector. The breadth is mediocre, better than the overall universe, but still not wonderful. And the relative comparatives are just now starting to kind of turn back up for us here. Showing some strength, trying to make some small breakouts. The new high, new lows are, again, mediocre. But it is a defensive name. It did catch my eye in the intermarket analysis. It also does have some subsectors here that have started to make some moves over the last week and are starting to peak back into positive after having some negative. Now, real estate services in mind right now, it's kind of messed up. I don't think these numbers are real accurate because it's not showing some of the names it should. But it's still not a great area with the Redfins and the Zillows and a lot of those types of things in there. Remax, some of those that haven't been killing it. But again, let's wait until I can get it fixed. But these other three really are the important ones to focus on. They're the true REITs. You can go here and we can look at the ETFs. This is what I want to focus on more tonight. But then we'll touch on each of the subsectors. Just to kind of look. But again, another fairly small sector, so you can just go through and rank all of the real estate stocks that are in our full sector if you want, as opposed to jumping down into subsectors. I'm going to do it via subsector because that's kind of how I like to run through things. But we're not going to go through too many stocks in this area tonight because I'm going to go ahead and try to wrap this up here in just a bit, give you an overview. But from the ETF standpoint, the one I really like the most here is KBWY right now. Decent volume, 5% dividend, high dividend REIT right now, and it looks like it's trying to break over this volume and value area on the weekly. If it can make this move out of here on the weekly and the daily, have a potential for an RSI bull range shift, which puts the price probably somewhere up here in the breakout level, which can continue to move. Not going to be a fast mover with that kind of dividend, but this is kind of a volume shelf that really could gain some attention and give it a little bit of a boost. It's got an RSI positive reversal on the weekly. It never lost its bull range during all this. It moved sideways while everything else was getting hit. The next one in there, just a basic real estate, you can kind of see, give you an idea of how things are reversing. If we start with the weekly, you can see it came back to these previous breakout levels, tested it. This is kind of a good RSI, a candlestick bullish engulfing after a pullback into the MA bands, moving it back above at the RSI bull range test with CFG negative. I mean, that's a lot of confluence right there in one area. And on the daily, you can see it had a failed breakdown underneath this nice lower level of the range. Failed breakdown, moves its way back up, and now it's starting to try to get back above the MA bands. We're still in a bear range, but RSI is leading price here. And again, see if we can get some continuation here and get us a nice early entry on the right side of this base. This would be one of the areas if we saw interest rates cool off a little bit, you could see more here and a little less on the financial side. I think Dan Russo from Potomac made some comments about that this weekend you might want to look at. He does some great work. The next one is XLRE. This is the equal weight. Again, really similar looking chart, but it is definitely something that we want to be focused on and taking a look at as we get down here and see these reversals in all of these key areas, and these failed breakdowns are really the big thing that caught my eye. Even though the overall sector isn't outperforming, a failed breakdown like this really could offer some juice back into this sector. Now when we look at the subsectors, I'm going to go through the equal weights really quick. Retail is the area that's really already kind of leading out of this little base area on equal weight standpoint, not in the bull range yet, but very close. Brett there is better than the overall markets. The short term is leading. Longer terms are starting to try to catch up a little bit. Relative comparatives have turned up, and we have some stocks in there that you can take a look at. I'm sure I'm not going to go through them right now. Residential mortgages, again, this one's still below that little basing area. Failed breakdown, still kind of the same, but just not showing the strength to get back up just yet. Still in RSI bear range at or below 50, or right at it right now, 50.5. Breadth is mediocre, just slightly better than the universe. Just barely turning up on the relative comps. And then again, you can jump in. There's still going to be strong names. You know, you have things like APPTS or APTS, you know, apartment.com or whatever that is. Oh, I'm sorry, this is in a buyout. So yeah, that's one of the reasons that hadn't moved much after its big gap up. But you're going to find some strong names up here at the top of this relative strength, even if it is a slow area of the markets. That's what I would look at as the top, and then I would look at the RS movers. The commercial REITs are also right near the top of their area, so retail and commercial are our two top spots here in the REIT world, and starting to try to move up higher. Curling, its short-term breadth measures are starting to run. Summation is curling from intermediate, and the longer-term things are moving up. This percent above the 50-day moving average only at 30 is kind of an issue. But the 50-day or the 200-day is still above 50, so it looks like that pullback was just strong, but maybe it's trying to work its way higher now. The relative comps are there, and then again, we can get down into the actual holdings. You know, click through here, look through what you want. Right now, I think the ETF area is something I like in this to get a good range. But you know, you look and you find something like this after earnings, right at the breakout level, a really nice looking chart, turning itself up, a $4 billion, 3% dividend REIT, just moving into an RSI bull range at the breakout level. I mean, this is some really nice looking stuff as these areas try to start to turn around. So I hope that gives you a good idea of what's going on here in the real estate level. This is another sector that looks like it's starting to emerge. It is a defensive area, so it might be that if the inflation area cools down but we want to stay defensive, real estate might be a great place to be looking for some opportunities. All right, we're going to wrap up with healthcare here in just a minute, so hold on and I will move over to that area.